Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and welcome to a new trading week. Tonight, I'm going to be doing a brief preview of the conviction meter and show you what's coming up with the new iteration of the website. I'm really excited. We are officially completed with phase one. That is the back end uh, functionality. I actually created software. So I was chatting with Dan, the owner of TrendSpider. I said, I guess I'm a fintech guy, financial tech guy like you now. So uh, if you know anybody that's interested in licensing my software, that owns a agency, a brokerage, anything financial, let me know, and we're licensing it as well. So a lot of things happening here. I want to also thank one of our members, Larry. It took me a while to figure out who sent this. Can this be seen? Ah, there we go. That is Maker's Mark, a nice bottle of Maker's Mark. Larry sent this over to me as a Christmas present. Thank you very much, Larry. It took a while to figure out who sent it, but eventually we figured it out. There was no card in the box, but we figured it out. And thank you very much. It will not go to waste. And let's get to the markets, I guess. Let's say hello to folks. Let's things settle down here. I can see that the S&Ps are gapping up, but they're coming in a bit. So let's let them settle down. Okay. So this is Larry. Jedi Kid is Larry. Yes, I got it yesterday. I appreciate it. And it will not go to waste. So thank you very much, Larry. Appreciate that. Very thoughtful and very much appreciated. The lovely Jody, welcome. Talon, welcome. Even Bob, Tim Fraga. Dude, no, there is no market wrap on a Friday. The replacement for that is the week ahead commentary, which comes out on Saturday. So you should have got the week ahead commentary yesterday, and that's our strategy session for the new coming week. You're the second person that asked me that. All these years I've been in business, and over 20 years now, the contrarian trader, and twice in 1 week somebody's asked me that. So no, there is no Friday market wrap. It's encapsulated into the weekend commentary. Enoch, I don't know what that means, but if it's good, same to you. Oh, you didn't get it? I would check your spam folder because I saw that the member count actually went up, not down, but there could have been more members that joined up. Check your spam folder just in case. And if you didn't get it, I'll make sure you get it. So please check that and let me know before we sign off here, please. Okay. I thought you was. It looked like almost Nordic. So that's what I thought you were talking about. All right, Jim, we'll get it out to you. Talon, did you get it? Larry, did you get it? The weekend commentary? You got it. Okay, good. All right, so it went out, but Tim didn't get it. It's easier if I forgot to press send than looking for a reason why one person didn't get it and other people did. But okay, we'll figure it out. Okay, let's get to it. Let's talk stocks. And all right, so we have a gap up here on the E-minis, S&P E-minis. And I want to see if we take out this low. The reason why I'm watching this so closely is that There was a report that came out that over the weekend that the Japanese would be selling roughly $600 billion in U.S. stocks. What that time frame is, I don't know. So not quite sure. So we'll keep an eye on the markets right now. We're gapping up. We appear to be holding it. So let's move on. Let's take a look at the NQ. Gapping up nearly 1/3%. We're going to have resistance right up here. And this is the type of price action we're going to get for the remainder of the year. Very thin trade. Small caps up over 1/3%. Mid caps. Mid caps lagging here a bit. Only up 0.11%, so lagging the rest of the averages. Let's take a look at the, let's go to currencies. The dollar had a very strong showing last week. It flashed a bullish key reversal bar, but it's gapping down. This shows it is up, but that's actually, that is the reality. For whatever reason, it had a very strong showing after hours on Friday. So technically, it is up from the regular hours close on Friday. But at current, it's gapping down. I don't know why that happened, but lots of activity after hours on a Friday afternoon. Very unusual. Let's go to the weekly chart just to check out what the euro and yen did last week. Before we leave here, the dollar weekly time frame looks like it's doing a retest of the 21 period EMA in orange. That's bullish for the dollar. Euro. That had a rough week last week. If they can hold this inside bar, meaning no new weekly low or low, we could just say, you know, what this was just a normal correction. The fact that we don't put in a new weekly low or low just tells us that we have this coming week would be an inside week. That would imply that the trend is still healthy and alive and getting ready for a breakout. Just needs a bit of a consolidation. Japanese yen had a very rough week last week. Things are not going well over in Japan. And we'll set up a couple of alerts here. And this weak Japanese yen is good for U.S. equities. I talk about it all the time with members. The U.S. dollar, Japanese yen trade, weak Japanese yen, weaker interest rates over there, which they don't have. Their interest rates are historically low, but historical relative to the past 15, 20 years, they're very high. Only 2%, but very, very high for the Japanese economy. Oh, did you get it, Tim, or no? Did that work? Paul, hi, Bob and Traders. When does the Japanese market open? Chatter, that will be, off the top of my head, I'm not quite sure. Let's see. I asked for Eastern time. It's telling me 9 a.m. That doesn't make sense. In Tokyo time, it would make sense, not in Eastern Standard Time. I'm not sure off the top of my head. No, this is not. On Monday, Tokyo opens at 7 p.m. Eastern Standard Time. So it looks like it could be 7 p.m. Eastern Standard Time tonight. It'll be Monday morning in Tokyo. Okay. Odd. Okay. All right. So that's the Japanese yen. Let's check back in with currencies, but I want to go to cryptocurrencies. We'll go shorter duration here. XRP moving up higher. We'll be doing our dollar cost averaging as we do each Monday. And I think that we're beginning to find a footing on XRP. The selling by and large, while you're still seeing selling, you're not seeing massive new weekly lower lows. That's kind of abated. And I think that we're going to get a rally here pretty soon. Back to a 15-minute chart. Check in with Bitcoin. Up 0.61%. Weekly view. Again, it's been sloppy. It's just consolidating. That's all it is. So it looks like the worst case is over. I think that it was I forget who it was. I think was it Tom Lee that said they was expecting to see Bitcoin go lower, like to 60K, and then he expected it at all-time highs at the end of 2026. I don't know. But I heard that somebody put a price target of 60,000 on Bitcoin. Tom Lee, at least by year end 2026, expect new all-time highs on Bitcoin. Let's check in with energy prices. Let's go back to a 15-minute chart. Let's click. It started off with oil opening up. Energy stocks had a very rough week last week, but this is looking pretty good. Let's go to a 4-hour time frame. Oh yeah, this is getting ready to move. So this is what we look for, right? Let's walk through the observations that make us bullish here. So we bottomed out here last Tuesday, consolidated, rallied, pulled back. What does that mean? Higher low. That's what we look for. Now, what we're beginning to see is pressure on the pivot point, and what we'll be looking for, NQ just made a lower low. We'll go back to equities in a second. So oil's trying to break out here. I'm tempted to throw on some contracts of the mini contracts. MCL is the mini contract. How far out can we go? I don't like being in the front month contracts. Okay, we'll just cue that up just in case I decide to pull the trigger. There we go. That was it. Limit order. All right. I just bought some oil. All right. Now what we want to do is I want to know if we break to lower lows. So we keep any losses small. Okay. What else do we want to take a look at? We want to take a look at natty gas. Natural gas has been brutalized of late. Up 1.83%. Moving over to gold. Gold opening down, but we're off the lows here. But we broke support after hours on Friday. Do we break through it? Let's check in with silver. Silver up 0.41%. We may be at an all-time high. Yeah, we are. All-time high this evening on silver. So that rally continues. Very nice. Gasoline prices, they're ticking up. Palladium. Oh my God. Huge move here on palladium tonight. I saw this setup. I kept saying I saw the setup. I never pulled the trigger. I saw it back here, right here. Every night on market wrap, I kept saying I need to buy palladium again. It's always treated as well. And I didn't do it. Strong bullish here, smelling a real Santa Claus. Yeah, Tesla's looking very, very good. No doubt about it. All right, what else? Let's just take a quick look at agriculture. ZW, wheat, very weak. Very, very weak. Corn. Looks like we may have a bull flag setup. You don't want to touch this unless we break out. Wow, soybeans got crushed. Avoid the soybeans. Okay, last one here, live cattle. Now, we did a bunch of shorting of live cattle, a little bit of longs. I don't put those trades out because they're a little bit too complex. But live cattle, I think this is after hours on Friday. Yeah, this is after hours on Friday. So that's not active right now. But live cattle, I think that we're going to see more of a fade here. Let's go to the weekly chart. We've had a nice rally off of this sell-off. I think they're importing a lot more beef from Argentina, and that may bring down prices here. Okay. I think that's everything. I wanted to check back in with equity prices, see how they're leveling out here. So NASDAQ still strong. ES still holding gains. Nothing really to talk about here. Okay. All right. So what you're looking at here is a mock-up. Okay. So this is going to look different. This is just the designer throwing in a placeholder image, but so don't focus in on the stop loss numbers. This is totally inaccurate, but the layout of the conviction meter is accurate. So this is what's new. This is what we've been working on for quite a while, because I wanted to address, and the idea actually came from members over the course of years. Remember, we've been doing this for 20 years. I started in December of 2005. And so, yeah, happy anniversary. I should have thrown a happy anniversary party. So feedback, and I've seen it on YouTube as well, where a portion of our business is trade alerts. Not entirely. We do analysis, a lot of analysis, market forecasting, but trade alerts is a part of our business. And some of the feedback I got, in particular from new members, is, I just joined. I don't know where you're at with this position. Are you adding to it? Are you near the end of a trade? Is it a long-term investment? Is it a swing trade? What's the strategy here? Even though I placed the trades and it's all transparent, and it still will be transparent, it wasn't intuitive. It wasn't intuitive. And so the feedback that I got from members was, we want something that's intuitive, where we click a button, we take a look, we know exactly what you are planning with this trade. Are you closer to exiting the trade? Gold just broke out. Or are you reducing size? Are you anchored in your position? So that's where this came up. So it'll look a lot like this for each level: silver, gold, titanium. They're going to have different levels of this. But trade type, you'll have a mix of investment or the 7% dividend club. That's where we buy for an investment, longer term stocks that are beaten down, yet they pay an abnormally high yield on the dividend. Or they have great setups on a monthly chart. They look like they're breaking out, just like we have with FLNG, and they're paying a ridiculously high dividend. So that's the part of the 7% dividend club. Is it a swing trade or is it an extreme trade? What's an extreme trade? Maybe we're going to buy a stock that's beaten up with RSI at 10. It's a quality stock. It just, everybody hates it, but that's the why that we're in the position. A swing trade, days to weeks. We could be in that trade. There will be no drop down for day trading, because that's not what we do. So this is for the more, I don't want to say sophisticated investor. I think it's for the more serious investor. This is who it's for. And what you're not seeing here are, and this is why I say this is just a mock-up. Like if I just initiated a position, you would see a rocket, like we're in launch mode. And I could add 3, 4 more position tranches, and you could still be in rocket mode, and maybe it levels out. And I switch the icon to an anchor, meaning we're good here. Let it consolidate. If it begins to break down, maybe we start scaling out a little bit, and then you'll see a harvest icon. Or if it begins to break out, then the rocket comes back in lieu of the anchor, showing you now we're in accumulation phase again. So it's should be a lot more intuitive than what you've seen in the past, and nobody else has this. Nobody else has this. So we're the first, and I thank my members for giving me feedback, because feedback matters. I do listen to it, and this is the outcome. Again, this is not the final version. It will look different versions for different levels of membership. So this is what's coming down the pike. And you can see here that in the next iteration of the website, because once we're done with the relaunch, then we go into a new phase of adding AI into the Titanium. With Titanium will now be the highest level membership. So there's going to be a change in platforms or tier levels. But we're going to be introducing AI, trade journaling. Basically, you're going to be able to enter your own symbols in your own dashboard and execute a trade using a conviction meter of your own. And basically, at the end of that trade, how'd you do? You'll be getting a report card for the most part. And if you don't want it, you don't have to have it. Sometimes it's difficult looking in the mirror, but trust me, being honest with oneself and looking at failed trades is the best way to not make those mistakes again. So that's what we're trying to bring. It sounds like homework, but if you're really, really serious, that's the way you learn how to trade. You look at your losses and you say, okay, this is what I didn't do. And the AI is going to help you walk you through it. So a lot coming down the pike. Current members, no price increases for you. You stay the same. The new version of the website, every single level will get TrendSpider. Now, the price is going to go up because I put a lot of money into this. So we got to get our money back. There will be no 14-day free trial offer, because the cost of TrendSpider begins the minute that somebody signs up. So I can't have 1,000 looky-loos coming in and just testing the software, and I'm collecting a bill from TrendSpider, and I can't have that right now. So maybe some point in time down in the future when we change our negotiations with TrendSpider, but as it stands right now, I have to get rid of the 14-day free trial. It's just simple economics. So if you sign up now and you can deal with the lack of functionality in the back end, looking forward to the future relaunch of the website, you lock in your current prices now. Current levels get TrendSpider with gold and silver levels. So take advantage of it now. Lock in your price for the future. And this is just one of the new features that we have coming out. I'm very proud of it. Took a lot of work, and we're literally going to be able to sell this to family investment houses, small shop brokerages, whoever wants it, my competitors if they want it. But yeah, so we're now in the fintech business as well. So a lot's been changing here over the past several months. So enough of that. Let's get to it. Let's talk about TrendSpider. Their sale. Don't use my 35% discount tonight unless you're going to go with their standard edition. They currently have up to 66% right now. So use the link below, head on over, lock in your TrendSpider subscription, and I'll be demonstrating the value of it tonight. And if you're wondering why am I pushing TrendSpider, they're a partner. They're a business partner, and it's a great service. And perhaps you're not ready to sign up for a membership with the Contrarian Trader. That doesn't mean you shouldn't have TrendSpider in your back pocket. It's very, very valuable. So take advantage of it. Use the link below, above on Twitter and on Facebook. All right, let's talk about data coming out. Let's stop and say hello to folks here. Thank you, Jody. Thank you very much. Appreciate that. I hope it, and I'll be collecting feedback as we roll out and as we go into our new revamp of the website, meaning adding on AI, trade journaling, etc. I'll be taking the feedback from members and saying, okay, so let's implement these changes if it makes sense. So thank you very much. An ounce of silver is now more this. Okay. An ounce of silver is now worth more than a barrel of oil. Interesting. I did not know that. Smart people. You're in. You're absolutely in. No doubt about it. Okay, let's talk about the. Did you not get the week ahead commentary, Miser? Not sure if I'm titanium yet. Signed up. No, you could check your profile. It's there. But I'm pretty sure you're locked in. You're if you say you're titanium, you're good. So double check if you want, but you're locked in. Excuse me. Okay. Economic data coming out this week. Nothing coming out on Monday. Tuesday, delayed GDP report. We get the durable goods order. This is a very important number because this measures the growth forecast of durable goods, washing machines, dryers, etc. Anything that's a large ticket item that lasts a number of years. That's durable goods. You want to see that number grow, but they're expecting a contraction in that number. Industrial production, consumer confidence, huge number coming out this week. Wednesday, we're getting initial jobs claims early this week on Wednesday because the markets are closed Thursday and Friday. We get a long weekend. Nice. Some good stuff there. So it's going to be an abbreviated week. Let's appreciate the fact that while we may be seeing gaps up right now, it's going to be on very, very light volume. The big whales are over in Stad skiing right now. They are not on Wall Street. They are going to be putting computers on autopilot, telling them, keep this market in check, and then they'll be back in 2026. So I would not take any type of price action, either up or down right now, as real indication as to the tone of the market. Now, taking a look at the Federal Reserve's balance sheet. The Federal Reserve's balance sheet, we're going to be watching this very, very closely. Remember, Jay Powell said that they're going to begin buying 2-year treasuries, short duration treasuries, and it's reflected on the Federal Reserve's balance sheet. So if you're wondering why there is a bullish bias besides seasonality to the market right now, look no further than this. A lot of eyes are on this. The problem is that they're not differentiating between short duration treasuries and long duration treasuries. That's real QE. That's what that's what gets the market going, not buying short duration. Right now, there's something wrong in the plumbing at the system. So whatever they're sealing up some cracks that they don't want exposed right now. That's why they're buying short-term treasuries. The valuation of the market at 40.15 on the Shiller PE ratio, the second highest since the dot-com bubble. The Buffett indicator, strongly overvalued. We are here. We are here, folks. Think about this. Going into 2026, we are now, I wish I could put up a 3 standard deviation move beyond historical norm, which is down here. This is insanity. Clear insanity. Now, if you're in your 20s and 30s, early 40s, and you're dollar cost averaging, go for it. You're fine. But if you're in the later years and you're putting on big, long bets on the S&P 500 right now, not a wise move. Because this is the forward-looking return on the S&P 500 here. When you buy the S&P 500 at 23 times PE, your 10-year annualized return has always fallen to plus 2% to minus 2%. Think about that. The money is made on the buy. What does that mean? It means that you got to wait for the right time to buy. If you're dollar cost averaging, that's good. You're buying less shares at higher prices, more shares at lower prices. It's the easiest way to become a millionaire. By far. By far. Dollar cost average, young age. By far, the easiest way. Lowest risk, easiest way. The way to go broke is to put on big, long bets, especially speculative bets, when you have the market priced at a price to book, which has never, ever been seen before on a price to book basis. So we're looking at PE multiples. We're looking at valuation relative to GDP, the Buffett indicator. We're also looking at price to book. This market is insanely overvalued. So while they may be gapping it up and they're putting lipstick on this pig, 2026, the early part, I think is going to be a rocky road, similar to what we saw last year, or this year, I should say. My mind's already into 2026. Also, when you take a look at the MOVE index, what's the MOVE index? The MOVE index is like the volatility index for the S&P 500. So when the VIX is low, you got to go. When the VIX is high, you got to buy, right? So when the VIX is really, really low, as it is right now, it's time to, you know what, maybe lighten up some. Valuations are crazy through the roof. Let's lighten up some. Doesn't mean you can't trade around a short position or just sit in cash, collect your interest, or buy value stocks is what we're doing. 7% dividend club. And that when the VIX is low, you got to go. When the VIX is high, you got to buy applies here. Because what the MOVE index is volatility on U.S. treasuries. So right now, there is no fear of loss in the treasury market. Doesn't mean that this can't move lower. It just tells you that this is unsustainable. And at some point in time, there will be a reversion to the mean. So what does that mean? And before I move on to what does that mean, I can actually illustrate it here. Overlaid here in black line chart is the S&P 500. You could see that when the MOVE index, again, volatility on bonds, meaning bond prices go down, what must that mean? Yields go up. Federal Reserve does not want that. They want yields down, but they don't want to have to. They don't want to have to go in quite yet and buy long-term debt to do that. They would prefer the markets did that. So when this moves up, S&P moves down. And to bring it home a little bit closer in time frame, this was the early part of this year. We had a major rally in the MOVE index, meaning bonds down, yields up, and you saw the S&P 500 do a nosedive. So we need to respect where we're at right now on the move index, because when you take a look at the chart of the 10-year yield, this is a monthly view. I want to go to weekly. That's not a weekly chart. Where's my weekly chart? There it is. We broke out on the 10-year yield here the week of December the 8th. Last week, while yields were down, they held the breakout point. They did a retest of the breakout point. And when you go to a daily chart of yields, this is a bull flag setup. This is a continuation breakout pattern. So if I would charge, I'm not a gambler, but where I charge with, you have to put a nickel down. You need to bet on which direction bond yields are heading. Well, if I take a look at the MOVE index, I take a look at the fact that government spending is out of control, and I take a look at the chart of both the weekly and daily 10-year yield, it's a no-brainer for me. I think that yields are pressing up higher. And that is not good for equities. Now, not to be a Debbie Downer, but there is opportunity out there. You know, what we're doing right now is that, yes, we have a short position on the QQQ. We booked a portion of profits last week. I think it was on Wednesday, and we had that big down day. I said, you know what, let's make some profits real here. They gapped it up the next day. We stepped back in, purchased the shares of SQQQ. And so it was a good little trade. So what we're doing with the 7% Dividend Club is buying stocks that are distressed, beaten down. Everybody hates them. Everybody hates them. And as a contrarian, I see a stock that's cheap. It's paying a ridiculously high dividend relative to historical norms. And if the equity market takes a nosedive, I know my downside risk is limited. And if it does move lower with the rest of the stock market, I'm getting paid to wait through a dividend. And if it's a cyclical play and we get QE that comes back, well, guess what happens to cyclicals? They go through the roof. So not only do we lock in a forward-looking dividend that is historically high, we get the possibility of an appreciation on net asset value of the stock itself. So it's a no-brainer type strategy. The other way to play it is to look for sectors of the equity market that are just not appreciated. In this case here, it's the mid caps. Mid caps still have lots of volatility, but they've grown from small cap and could be entering large cap territory soon. So they're cheap. Mid-cap stocks are trading at the cheapest valuation in history relative to the S&P 500. So if you charge me with saying, hey, listen, Bob, you need to start dollar cost averaging into a sector, I shouldn't say sector, a tier of stocks, large cap, mid cap, small caps, penny stocks, which I never buy. What are you doing? Well, I'm going to be dollar cost averaging into the no-brainer sector here. Because if they push these lower and they go ridiculously cheap, well, when we come out the other side, when the Federal Reserve begins quantitative easing again, which they've already begun, then this is where you want to be. Growth. Moving on. Very, very smart. Very, very smart. I'll be talking about Diageo tonight. Believe me, it's right here. You can see the symbol, DEO. Breaking. Japan to sell $530 billion of U.S. stocks to stabilize the economy. JGB 10-year yield rises to 2%, highest level since the dot-com bubble in 1999. This all speaks to the yen carry trade. Very, very important trade. And that is a liquidity threat. So be aware of this. The Japanese may be needing to sell U.S. stocks to repatriate capital home. TZ Burton, welcome. I thought this was interesting. It really doesn't mean much, but I've spent NQ is recovered, moving higher now, along with the E-minis. I spent quite a bit of time over the past 5 years in Europe, and love a beautiful place. I mean, just absolutely breathtaking in many, many different ways. But here's the fact. The EU, in terms of innovation, is it's dwarfed. The entire EU is dwarfed by China, and we, God bless America, dwarf all of them combined, which is great to see. So I just thought this was interesting to see where we're at relative to the rest of the world, even compared to China. Very, very, this kind of makes you proud to be an American. All right, so the official Santa Claus Rally begins on December the 24th. It covers the last 5 trading days of December, plus the first 2 of January. SPX is up 77% of the times. The last 2 were negative, but there's never been a third straight down Santa Claus Rally. Just a bit of an interest point. All right, moving on here. So as contrarians, we look for opportunity where people don't see it. They're not looking. They've thrown companies out to the garbage. And to me, I grew up poor. I see that. I rumbled. I used to rumble through the garbage as a kid, literally. And I see stocks getting thrown away and paying a ridiculous dividend. I look for tells. I look at the charts. Very, very important. I'm primarily a technician. I do believe and I understand, for the most part, macroeconomics, correlations, and whatnot. And I look for tells. That's a big thing with me. Is a tell is basically a test. And what you're looking for is a reaction to a news event, either directly to a company or it should impact the company. And you want to see whether or not it reacts negatively, doesn't react at all, or it reacts positively. Now, this article here is regarding Jim Beam. For whatever reason, Gen Zers, they're not drinking alcohol. Spirits are not their thing. Apparently, marijuana and the legalized marijuana is competing with alcohol, which I guess is a good thing. I'm not saying it's a bad thing. It's a good thing. And I saw this, and I've been tracking Diageo for several weeks now. And so on Monday and throughout this week, I'm going to be looking for the price action of Diageo and how it responds to this article or this event from Jim Beam, because they're direct competitors. Now, here's a chart of Diageo. Now, this is a weekly chart. This is TrendSpider. And bear with me 1 second. I want to get the yield. So right now, Diageo is yielding 5.56%. It's very attractive. Now, you may be saying, well, it's 5.56%. You can't put that in the 7% dividend club because it's not paying 7%. Remember, 7% is our goal. That's our average. Now, we have stocks that are paying over 12% dividends. So I can afford to put in Diageo and still maintain a yield above that 7%. It's the average that we're looking for. So not all stocks need to be yielding greater than 7%. Now, when we take a look at the chart here, this is a monthly chart of Diageo. And while we have put in new monthly lower lows, we're holding support. So back to this article, what I want to see here, and this is my tell, this is what tells me whether or not the bottom is in on Diageo. If we get a gap down tomorrow on Diageo and we close out the week down, it doesn't mean I won't buy it because I know it's cheap. I've already done the work on it. It just means that the bottom is not in yet. It's not time to go big in that position. But if they close out the week or the month higher after gapping it lower, or there's no response to the stock, and God forbid it goes up on this news, that's my tell. That's telling me you got to get in. Now's the time to act. While everybody's still hating it, they're going to hate this stock for the next year or two. That's fine. I'm getting paid 5.5% to wait. And when this rips, then we get our upside capital, net asset value appreciation. Just taking a quick look at the weekly chart here. You know, we still had a lot of volume last week, but what's important to remember is that they broke support. They reversed it the week prior to last. Last week was a doji star formation. Let me bring up the raindrops. Yeah, you had a blue doji last week. These are the proprietary to TrendSpider. These are raindrop charts. And this is a blue doji. So technically what this is telling you is that the bottom should be in for Diageo and that it's time to begin bull operations on the stock. Doesn't mean you go buying all at once. It means that you nibble. You know, the longer the consolidation, the greater the validation of any breakout, and we look to add more on strength. So that's Diageo. Let's do some chart requests, and we will close it out for this evening. All right. We bring this over here. Let's get to it. Okay. First one up is CRCL for Sean. All right, so I just put the auto Fibonacci's on a weekly time frame up. We're right at resistance, 87.23 to be specific. Volume last week was good. The trend is still clear. It's defined. It's down. But I get the vibe that we maybe getting ready for a breakout here. Let's go to the daily chart. Yeah, we broke out. Daily time frame. This is the value of the automated trend lines. I've never looked at the stock before. I don't think I did. So I didn't draw these. This is the algorithm. And we broke out on Friday. This is your weekly upper band of resistance. I wouldn't buy it here until such time as we closed above it. On that close above, nibble, small position. Then you want to add more on the retest and then get more aggressive on the follow through. So that's the shot here on Circle Internet Group. There's not much seasonality here whatsoever, so we're going to avoid that. Seasonality is great, but you don't want to use it with too little time. You want at least 10 years worth of data. Talon, UNH. All right, let's clean this up. Okay, UNH treated us very, very well this year. I can get the GI Joe with the Kung Fu grip this year because of UNH. It paid a lot of bills. And let's throw some trend lines up here. This is a weekly. Oh, this is a monthly chart, actually. Let's go to the weekly. I want to bring up, this is stalled out. I want to bring up the volume by price. Fractals, here it is. So basically, these are volume shelves. It just shows, it's another way of seeing where resistance is. And for that matter, support. So we're at pretty good support. But the problem is that this looks to be like a bear flag setup. Sorry, I know it got very, very noisy. But I believe it or not, I use these lines. I don't want to delete them. I would be a buyer of UNH on a close above 346.87 per share. Let's go daily view. We broke daily support on Thursday, rechecked it on Friday, and it failed. It got rejected. So you really got to wait to buy that strength. So there's no rush here to go in and buy more UNH. Seasonality wise, November, December, January, even October are good months, but this year it's really been sloppy, but it's understandable because of the damage that's been done here. So I think that seasonality really is not going to apply too much this year. For giggles, let's take a look at how we trade for the remainder of the year. Well, this coming week is one of the strongest weeks out of the year for seasonality. It's the second best out of the year. So maybe you'll have some seasonality headwinds, or not headwinds, tailwinds on UNH this week. But I would still wait for that recapture of support. Now resistance. What was it again? 386. Let's take this off. Even 339.50 looks good. But I would wait for that breakout. IREN. Okay, so this is the classic reversion to the mean trade, where I think this is a 3 standard deviation, actually 2 standard, but I'm sure this was piercing the 3 standard as well. Bollinger Band. And it doesn't end well. Right here. Once, twice, 3 times, correction. So, obviously I've gone over this one before. I think you need to wait for around $32. Volume is still heavy. Daily view. Good reversal day on Friday. We consolidated, gapped up. Volume decline, though. I would like to have seen rising volume on Friday. So while I think that you're near a short-term bottom here, I would be careful and wait for higher highs. January, oh God, December's terrible. How much data do we have here? This goes back a good amount. Oh, this is 2021. This is horrible data. Forget about this. Not enough data. It's only 4 years. Ignore. Sometimes if you look at that data with only a small amount of time, 4 years, it causes far more damage than any good. So ignore it. You didn't see that. So going back to the weekly chart here. Nice reversal off of support. It couldn't close positive, which is okay. There's definitely buyers down here. I think you need a couple of retests down here. You want to make sure that there's more buyers down there. But I think that you're very close to a bottom here, a tradable bottom. And just got to watch out for resistance at around 45.88 and then up at 49.66. So it's bottoming out, not a screaming buy quite yet. Soundhound. It's in a downtrend, Soundhound. My most popular video, actually, no, it wasn't. The UNH is my most popular video on YouTube this year. But Soundhound was that 2024? May have been 2024. I was very, very fond of the stock. I owned it and I sold it a while ago. And it is now in a correction. It had broken out above the upper band of its downtrend channel, and it was clearly rejected. Last week, it closed again back down below that breakout point. Volume rose last week, but still on an average basis, relatively light volume. Basically, what's happening here is there's a buyer's strike. There's a concern that this space has gone too far and that only your hyperscalers are going to be profitable. And you're seeing that with names like CoreWeave getting destroyed. So I think Soundhound is now in that realm of stocks that are getting punished because of concerns about AI. So I'm not a buyer here. I wouldn't short it, but I'm not a buyer quite yet. Doesn't mean I won't be in the future. BBAI. For Patrick. Patrick, how many years have you been trading this stock? This is one of his favorites. Weekly chart, Big Bear AI. We're at the lower band of a trading range. I mean, this goes back a while. This is some consolidation here. Let's go to the monthly chart. I'll tell you. This thing closes above 663, I would nibble. If it closes above 722, I would be an aggressive buyer. So because we're building a nice cup here and you're getting a little bit of a downward sloping handle. Let me illustrate. I wouldn't call this a classic cup with handle formation, but close enough for government work. So it looks as though we could see some strength here in the coming months. Only 8 years worth of data for seasonality. So we'll avoid that. So I'm growing bullish on Big Bear. UUU. That's some symbol. 4 U's. Apparently, I have reviewed this before. You would think I would remember that symbol. Monthly chart. This is another one that got uh, very, very ahead of itself. Like it had a Wile E. Coyote moment right here. Beep, beep. So we've corrected. We're holding support. I'd be okay with a nibble here. Scratch the edge. Get it on the trading platform so you can watch it. But I wouldn't go big. Where I would go big here is on a close above 1665. Why? Because that's your pivot point on this stock. You put in a higher low here. If you get a higher high, meaning a close above the pivot point, then it's going to be game on for at least a short-term swing trade to the upside. So it looks promising. It looks like it's stabilizing. Energy stocks had a rough week last week. Oil is rising. I don't know what space this is in, but if it's correlated with oil, I just bought oil. So if it is rising, then that should bode well for energy stocks. Therefore, it should bode well for this stock as well. So bullish. That's it for tonight, folks. Talon, you are very, very welcome. CRCL is a stable coin. Did not know that. Learn something new every day. Now, I worry if the rally is a bull trap. Yeah, it's a reasonable worry. I don't disagree with you. I think the remainder of the year is going to have a bias, a flavor to the upside. No great shock there, but I think that you're welcome, Miser. I think that 2026 is going to be a different playbook. So we'll be around. Scott, you take it easy as well. Everybody, thanks for being here. Don't forget, TrendSpider, link below on YouTube, link above on Facebook and Twitter. They have great specials there. And don't forget, lock in your prices now for the contrarian trader before the new rollout. Current members are locked in at their existing prices, so take advantage of it. Everybody have an awesome night and a profitable trading week. I'll talk to you soon.